All right, traders, it is time to prepare to trade the best setups at the best prices. I am going to be going over the key levels on where the bull and bear traps are going to be set. That way you know exactly when to be buying call options and when to be shorting and buying put options. Let's get into the in-depth price action analysis for the SPY. This is going to be a good one. So the main levels that I really want you to focus on, so let's just break this down here very, very quick. And this is what I want you to understand. So right now, the SPY is gapping up. It's going to try to open up higher than it previously closed. It previously closed at $390. Right now, it's at $393. So it's gapping up and it's trying to fill the gap that is waiting to fill above, which is something that I told you guys in my last video. I told you guys a bear trap was going to be coming, whether it happens at 389 or 390, or if it drops lower, a bear trap will be setting up for a spike to fill the gap at 396. So the point I'm making is SPY is gapping up and there is a gap to fill above. Write this down. This is your best level to short and buy put options. I'm telling you, $396, that 396, 396.11 gap, right? That's your best play in terms of puts. So in terms of put options, you need to be focused on the resistance level and on the gap, which is towards $396, right? And that's something I would just kind of get in towards. In terms of recent trends on the SPY, as of recently, when it has been gapping up, it tends to come crashing back down to fill the gap, right? So I would encourage you to look for put options at resistance. Like here's a prime example right here. It gaps up, it hits the key resistance top of the channel, and then it reverses, right? So we know the top of the channel and the key resistance is towards 396 with this gap to fill right here. So we know the level. Also pay attention to those pre-market highs. That's your best play for puts. Now, this is what I want you to understand. In terms of being bullish and in terms of buying call options, if this does end up gapping up, which it likely is going to gap up tomorrow because it's such a strong move. You know, we're talking about 3 points already, right? So it's basically confirmed in a sense. But if it does end up gapping up, $390 is going to be your previous closing price. We're going to have a gap to fill below at 390, and we have key support at 389, which was previous resistance now reacting as support. So this is good for the bulls. They're trying to turn that previous resistance into support. So keep an eye on 390. If you see 390 reacting as a floor, reacting as a support level, you're seeing bullish confirmations on 1 minute, 5 minute, 30-minute chart. On the gaps, I'll typically use the 1 to 5 minute. On the other trades, I'll use just the 30-minute along with 1 and 5 minute. But for the best steps, the best prices, I really just like to focus on 1 5 minute in and out. And then for the other trades, you can use 30-minute. But a really good confirmation is 30-minute, very solid confirmation. So $390. If you see 390, a floor is forming, support is forming, you're going to want to buy calls, ride it up to the resistance. You got some resistance right here at 392 to 392.40. That's going to be like that sell zone. We get in and out quick, very, very quick, or a lot quicker before that. We don't hold too long, scalping like snipers, right? So sell into the spikes at 391, 392, right? That's if you see a floor. One thing I want to say about that is that trade idea in terms of buying those call options will be better if SPY has a gap to fill above. So if this doesn't go back to 396 and it crashes back down to fill the gap at 390, that's going to make buying calls a lot better of an idea in my opinion, because then there's a gap to fill above and it's going to try to reverse and fill the gap. So write that down as well. Now, let's address this. If $390 breaks down and reacts as a resistance level, then it's going to have a small little drop to 387. It could even be to 384. I don't think it'll go that low, maybe 385, but 385, 387 range. It'll have a drop there. And if that happens, I believe it's going to be another bear trap where the bears get trapped overall direction and then it spikes back up within some time this week, but only really if there's a gap to fill above. So basically what I'm telling you is if there's still a gap at 396 and it just cracked through 389, it looks bearish. I think that's going to be a gift to buy the dip in between 387 and 385 and just kind of hold it and ride it out into the week to kind of play for that gap fill play, sell into the spike the next day whenever it happens, right? So those are all things that I want to bring awareness to. Right now, it's gapping up. Best thing you could do is buy puts at 396. If that gap doesn't fill, best thing you could do is buy calls at 390. If the gap fills at 396 and then it drops to 390, As long as there's bullish confirmations, you can buy the dip at 390. Max pain is under 389. If you hold calls below 389, you deserve to lose big. If we form a roof at 390, that's bearish. If we crack 389, that's very bearish for the micro. We drop to 385, 387. If that happens, I believe it's going to be a very nice bear trap. If the bear trap is not set at 390, then it should be set at 385 to 387. But mainly in terms of that opinion, if there's a gap to still fill above at 397, if there's at 396, if there's no gap to fill above at 396, then I would be extremely hesitant and I would use 30-minute bullish candlesticks if I were buying calls, right? But the point being is, as long as this gap has not filled, I believe we're going to be seeing bear traps getting created. And those bear traps should be triggered at 390, if not the 387 to 385, right? And the max pain, if you buy at 390, is under 389. So that's what I would focus on. We explained the best level to buy puts is when this gap fills for a short, for a reversal, ride it back down to fill the gap below. Best price to buy calls would be at 390 if there's still a gap to fill at 396. If you see bullish confirmations at 390 with no gap to fill above at 396, it already closed, then you could still buy calls. Max pain is at 389, not going to be as good as a trade. Don't aim too big, scalp in and out. And of course, if we sell off and drop below 389, I think it's going to be a gift, but mainly only I feel and believe that way in terms of a bear trap into buy and hold calls if there's still a gap at 396. If there's no gap, then I don't feel so as strongly as that, and I will mainly just sit on the sidelines and just focus on bullish 30-minute candles. So in terms of best setups and best prices, the gap close reversals 390 and 396. For those, I use 1 minute and 5 minute candlesticks. In terms of the other setups that are not the best, I use 30-minute candlesticks. But what I'm telling you is the 30-minute confirmations are amazing if you combine them with the best setups, best prices. But me personally, 1 minute and 5 minute chart is good enough for me in terms of confirmation. The 30-minute chart confirmation with the best setup, best price is just an added bonus. But if you want an extremely high win rate and you really don't want to ever lose and you have a smaller account and you're trying to sharpen your edge, then I would tell you 30-minute confirmations are your best route to go in a sense in terms of confirmation. But if you use those in terms of the best sets, best prices, you're not going to get the best price, but you can get a higher win rate. So just keep that in mind in terms of scalping, right? I mean, if you're getting in and out very, very quickly within minutes, the best price might not be the most important thing. Maybe you want a higher win rate and you just want to get in, get out like a sniper within minutes. Therefore, the price isn't the biggest difference, but you don't want to be getting at bad levels because then if it goes against you, you're looking at a bigger loss than usual, right? You always want to focus on great entries. So those are my recommendations in terms of what I would focus on heading into tomorrow. And like I said, the key levels, 396 and 391 to 389. And if it drops below 389, then the call zone would be 385 to 387. But I would really only push that idea if there was still a gap at 396. If the gap already filled, I wouldn't really be pushing that idea and I'd be sitting on the sidelines. So your main plays, if the gap fills, your main plays, 396 gap reversal puts, 390 calls, reversal there. And if this gap doesn't fill at 396 and it cracks through 389, then lotto calls at 387 to 385. And that could be like a swing trade in a sense. Those are your main plays. I strongly believe it's going to fill that gap. Whenever it happens, it happens. And just be aware in terms of short-term patterns when SPY has been gapping up. Look for reversals at the 396 level. Look for bearish confirmations at the 30-minute chart. When you get some confirmations at this gap, you're going to want to be hitting puts at 396. That is how you prepare to trade the best setups at the best prices. If you do want to be a part of Trader Society, it is a one-time fee. It's lifetime access. We're going to be raising the price end of March. Now is the best time to join Trader Society. I will see you guys live on stream tomorrow. With that being said, let's crush this trading plan. I will see you guys then.